And the Fed needed to say something, Elijah, because the inflation was just simply, out of control.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Jerry Robinson from followthemoney.com. Jerry, thank you so much for joining us today.
Oh, it's a blast to be here. I always enjoy it. Thanks, Elijah.
Definitely. Now, we just heard from the Fed on Wednesday that they're kind of pushing forward their expectation to raise rates to about 2023. It could be as soon as 2023. So your perspective on this and how it kind of rattled the markets. We saw gold and silver sell off, the stock market sell off a bit. Your perspective?
Yeah, it's been quite something. In fact, we were warning our members just prior to this Fed meeting that something certainly needed to happen. The Fed needed to say something, Elijah, because the inflation was just simply, out of control. I mean, we haven't seen these kinds of figures since, certainly since 2008 on consumer prices, just the regular old consumer price index. But when you look at the core inflation in the month of May, that was the highest level we had seen since 1992. So we're talking 3 decades. And then the producer price inflation came out just before the Fed meeting, showing a 6.6% increase in the month of May, which that's the highest number that I've ever seen. Some economists may have seen higher numbers. I've never seen anything higher than that. So we knew that if the Fed didn't address this head on, if they tried to play footsies with this and act like it wasn't there, that the market, that investors would think that the Fed was flying blind. So the fact that the Fed, even though the Fed really didn't do anything, they didn't raise rates at the meeting on Wednesday, even though they didn't announce or even really use the word tapering at all, which is what they're going to do before they raise rates. They're going to start cutting back that $120 billion monthly bond purchases that they're doing before they begin to cut rates. But even though they didn't do any of that, they suggested that they were pushing up the timetable for rate increases. Now, we've had the interest rate near zero now for some time. And so investors were listening very closely for that. We weren't expecting any rate hikes probably until 2024, as of the March meeting that they had earlier this year. At this meeting, they suggested that would actually be accelerated, and they would probably be 2 rate hikes sometime in, I think in 2023. So, then we were going to see what are the investors going to do now? How is the investing community going to react to this? And we have seen, as of this recording this morning, that we're doing on the 17th of June, the day after the FOMC day, we see commodity prices are getting hammered for a couple of reasons. Number one, you have the dollar that's resurgent and bond yields that are resurgent in this environment in anticipation of some relief for the U.S. dollar and for rates to go back higher. Secondly, China has recently announced, it's been hinting that it was going to unleash some of its commodity stock, some of its metal stock from its national reserves to combat some of these crazy prices we're seeing in the commodities complex. And they confirmed that over the last 24 hours. And so China is releasing, aluminum, it's releasing, I believe, copper and a few other metals into the system to alleviate some of these, strong price increases. So you have that, you have a resurgent dollar, commodities are getting hit in that environment. Overall, the stock market in this environment seems to be holding up. We haven't seen a tremendous slide in stocks yet from this statement. But this morning, I'm looking at numbers here. Gold is down, nearly 5%. Silver's down almost 7%. Platinum's down about 6%. Copper's down about 3.5%. Palladium's down 10%. Oil, by the way, is also holding up very well in this environment. Some people are expecting $80, I think it was JP Morgan, or maybe Goldman Sachs. One of them had put out a expectation of $80, oil by the summer. We have been bullish on oil since December. In fact, we put out a big call option for our members. I was just hearing from one of our members who had heard about our call options, long call options, in the money call options on oil back in March or April of 2020. And that has had an incredible run. We detected a big uptrend in oil back in December, and it's had a nice run, and it just keeps going. So oil producers are finally having their day in the sun after a big rout. But it's been a tough last 24 hours for commodity investors as the market tries to regain its footing. Now, you know how the markets are, Elijah. Tomorrow, everything could be going back up again. So you never really know what investors are going to do. But we follow the money here. We pay attention to price, we pay attention to volume, and we're pretty agnostic as to what the markets should do. After you've been trading or investing for some time, you realize that you can't wish the markets higher, you can't wish the markets lower. You must just simply follow the money, and that's what we do. We just simply track the price, we track the volume, we follow the trends. And right now, gold and silver and platinum are all locked in big, major uptrends. The dollar is still mired in a massive, brutal, major downtrend. But, we'll have to see what happens. We'll monitor that and continue to alert our members.
So you're saying that gold, silver, platinum, they're all still in an uptrend. So you just see this sell-off kind of as a blip along the way. It's not really a change of trend.
It's not a change of trend yet. Right now, they're all holding their uptrends, and I'm referring to major uptrends that we track. We track swing uptrends, which we identify on the daily chart, position uptrends, which we identify on the weekly chart, and then long-term uptrends, which we identify on the monthly chart. Most long-term investors pay attention to the monthly chart. If you're day trading, you're probably paying attention to a 15-minute chart or an hourly chart or a 4-hour chart. But when we talk about uptrends, we talk about them in those three flavors. And right now, gold and silver and gold and silver for sure are still in those major uptrends. And so until they're broken, the path of least resistance for them is up. Now, we're having a reaction right now to what the Fed has said. So we'll see how it all works out. But the Fed also admitted at that statement, or in their press conference and also in their statement, that inflation is running hotter than even they had expected. So we're not out of the woods with inflation, and how that trade will continue to develop, we'll just have to watch.
Now, with respect to cryptocurrencies as well, because we have seen a sell-off in them really looking back for the last month or two, your expectation going to the end of the year for Bitcoin and cryptocurrencies, there have been a couple developments. For example, El Salvador making Bitcoin legal tender. So your perspective on kind of the new developments in cryptocurrencies and also the price action you see going to the end of the year.
So what's interesting about cryptocurrencies is that we have been bullish on them for a long time. We began accumulating Bitcoin way back in the day, 8 or 9 years ago. We were fortunate enough to know about it early. But our philosophy has never changed towards cryptocurrency. Some people have this feeling that cryptocurrencies are, that you shouldn't invest in them or they're bad news or whatever. We've always taken the tack that these digital assets are a new aspect of this economy, and they are, in fact, a reaction to the fiat monetary system. This is what people don't realize. When they look at the Bitcoin white paper, you will discover that the purpose of Bitcoin is to create a finite system. A finite system. Imagine that. Imagine that, Elijah, in this infinite world where we have infinite paper. Stocks can issue new shares. They can dilute shareholders. The Fed can print money out of thin air. And here comes along an asset class that says we're going to be finite, or at least Bitcoin, we're going to be finite. There's only 21 million. 3 or 4 million of them are already lost. So they'll never be retrieved. So we're really dealing with the total supply, max supply of probably about 17 million. That means that if every millionaire in the world wants to buy one Bitcoin, they can't. So when you start doing the math and you realize what this is, it makes a lot of sense. So we began putting 5% of our total investable assets into Bitcoin, many years ago. And then we began expanding. We began investing in others like Ethereum and Cardano and several others. And we have our whole portfolio on our website for our members, and we alert them when we add new ones or whatever. We are bullish on the future of cryptocurrencies, but especially those that are specifically focused upon solving real world problems. There's probably 95, 96, 97% of these cryptocurrencies that are out there that are just pure junk. I mean, they're just they're not going to last. They don't really solve a real world problem. But those that do, I think are certainly here to stay. Now, we don't know which one's going to be the ultimate leader. You never know if you're investing in the MySpace or the Facebook. You don't know. You don't know if you're investing in the Ask Jeeves or the Google. You don't know early, but you find out later. And so we have spread out our assets in the crypto space across several great projects, in our opinion. We've researched them, and we are in them. Now, Bitcoin, right now, we expect to end higher than its previous high this year. So this looks a whole lot like the 2013 rally. So we have lived now through, I've been investing in this space now through 3 similar cycles. In 2013, we had from the bottom to the peak, we had about an 8,000% rally. That was followed by an 80% bust in 2014, 2015. Then we had another 8,000% rally into 2017. Some people may remember that one. That was more fresh in people's minds. And then we had an 80% bust that followed. Well, now we have entered into this new bull market, which we expect is probably going to deliver something similar. But we also expect it to be followed by an 80% bust, right? These are very volatile markets, of course. Now, when we look back at the 2 previous cycles, the 2013 rally and the 2017 rally, the current rally here in 2021 looks, in which we expected and told our members about, and we expected this rally. This rally was not a surprise in the crypto space. What was a little bit of a surprise was the 50% haircut we took in the crypto market suddenly. And when I went back and I studied the cycles, I discovered this didn't look like 2017, Elijah, because in 2017, we had more of a staggered approach, and then finally a big blow off top that resulted in a big 80% crash. But 2013, when you look at the chart there, you'll see almost the same story being played out in 2021. It's a very similar story where we had this big rally, about a third or a fourth of the rally, and then we had a 50% crash. And then we lingered for months in a sideways consolidation before resuming the rally. So just based upon cycle work, without having a crystal ball, just looking at the historical cycles, it is my estimation that we are going to see a surge in Bitcoin, Ethereum, and several other of these altcoins as we head into the end of the year. So we would expect to close the year higher than what we had hit earlier this year, back in May when we hit, or April when we were at $65,000 on Bitcoin, whatever it was, 64,000. So this has been a nice opportunity, I think, for some. But now when you mention things like El Salvador, this is where things are moving. El Salvador adopted the US dollar back in 2001. El Salvador has been living in a situation, Elijah, where they have price inflation like the rest of the world, but they also have the US dollar, which is going down. Doesn't a country have a right to have access to a currency that is not debauched? This is what the president, El Presidente of El Salvador, is saying. He's saying, my people deserve a finite currency. And so he's making it legal tender. That is, if you are in El Salvador and you want to go down the street and buy something, the vendor must accept Bitcoin or the dollar. right? He must accept those. And you can pay with those. So it's legal tender. Now, who would have thunk that Bitcoin would be legal tender 10 years, 12 years after being invented? This is a huge seismic move. And it's being followed by other countries. Panama has a similar bill being pushed through in July. The Bahamas is moving closer towards this. Brazil is flirting with this. India is talking about making Bitcoin an asset class after being very anti-crypto for many months, or for a couple of years. So there's a lot of FUD in the space, but I think overall we're going to see a tremendous boom before this rally ends. And I would expect that this will be a spectacular rally followed by an even more spectacular bust. Let's just also mention a couple of other things that your audience would respect and certainly know, is that when a country like El Salvador decides to make something like Bitcoin a competitor or a competing currency to the dollar, they can expect some pushback from who? From Washington. So the IMF is already eyeing El Salvador's move and saying, we're not sure this is wise. Wouldn't be surprised to see some aircraft carriers just floating down there, around El Salvador for making such a move. So this is actually going to lessen the dependence of El Salvador upon the U.S. dollar. This is what Iraq tried to do before their leader was hanging from a noose. This is what happened to Iran. This is what Iran tried to do before they entered the axis of evil, according to Washington. This is what Venezuela tried to do before they were, thrown into the axis of evil. So El Salvador is joining that group. Let's not be surprised if we hear negative news, negative press suddenly coming out from Washington about El Salvador or Bahamas or Panama, or fill in the blank for any of these countries who decide to diversify and give their people a competing currency so that they don't have to sit in a currency that is dropping in value year by year. So this is great news for long-term Bitcoin investors, because 10 million new potential users just came online. And I think it's going to radically transform the financial landscape in El Salvador, because a large percentage, probably 20% of the nation's GDP of El Salvador is remittances. So people sending money back home, and they have to pay all of these third parties. And with Bitcoin, they now have the ability to sidestep those financial institutions who are not going to be happy about it, but that's just tough for them. So many countries will see the light on this. Many African countries could benefit from having something to compete with their current currency. And it's really a fascinating thing to watch. It's just really incredible.
Do you see other countries adopting Bitcoin as legal tender?
Yeah, absolutely. But Panama has a bill coming up in July that they're slated to be talking about it. Bahamas is moving towards it. As I mentioned, Brazil is looking at it. Several South American economies, many of whom are dependent upon remittances, would really benefit from having something like this. Now, for the vendors down there who are hesitant, maybe you have a store and you're not sure if you want to accept Bitcoin, but now you have to. The government has made it possible where you can instantly convert. So they've developed a system to where when you receive that Bitcoin, if a vendor says, I don't want to take on this volatility of Bitcoin, I just want the dollar, well, then they can instantly transfer that into the dollar. So they can avoid that volatility risk. So they've really created a sound system here in El Salvador that's really a test case and a case study for other nations. And many other nations have been itching to find another solution besides the dollar, because again, many countries that use the dollar are facing the same thing that we are. The prices are going up due to supply chain constraints or whatever. And then you also have the value of the currency itself going down. So, for example, here in the United States, electricity prices rose about 4% over the last 12 months. And we say, well, that's not very high. That's not very much. But when you add to that fact that electricity prices went up 4% and the value of your dollar went down 6%, you say, well, that starts to add up. And in many of these places, they don't have such subdued price increases. So many of these countries would definitely benefit from having a competing currency with the dollar. Again, it's ironic that Bitcoin is the first.
You mentioned it's ironic, and I mean, one of the things that people push back against Bitcoin as an alternative currency is they say it's way too volatile to actually be used as a currency.
Some people prefer volatility over slavery. Some people prefer a little volatility to get freedom, as opposed to having stability with a lack of freedom. That's how I would say it.
That's a very interesting point. And I mean, you mentioned how it is being used as an alternative to the dollar. People have also said that Bitcoin is kind of a hedge against inflation. Your perspective on that?
Well, it has a track record of going up 200% per year for the last, ever since inception, on average 200% per year. And it doesn't seem to show any signs of slowing. Now, while countries may be adopting Bitcoin as their legal tender, it's not at all certain that Bitcoin will ultimately be the winner in the digital asset space. But it is certainly being used as a treasury asset and now legal tender in a country. But I am, to me personally, I am much more interested in being diversified in my own digital asset portfolio, which again, I only put 5 cents out of every dollar into cryptocurrencies. That's it. So I have 40% in real estate. I've got 20% in stocks. But people have to realize that when we talk about investing, we're not talking about the whole kit and caboodle. Many people say, well, I can't invest in Bitcoin because I go broke. Well, not if you put 5 cents into it, right? Out of every dollar. Many people have this all-in approach. They say, well, I'm going to go all in on gold. Don't do that. The rules of the game can change. There's no silver bullet in this economy. There's nothing because the rules can change at any time. You have to be nimble. And so there is a concern that the United States could try to ban crypto transactions, right, in the future because they'll get desperate. Even, for example, with stable coins, right now, we were just talking to our members about this. We are earning with stable coins 9% per year, getting paid weekly on this. So what we do is we swap our U.S. dollars for stable coins. We particularly use the U.S. dollar coin, which is theoretically backed by the dollar, and then you can loan that U.S. dollar coin, and you earn about 9% per year. This is going on. This is a real thing. It's happening all over the country. It's happening all over the world. And the Fed has its panties in a bunch over these stable coins, not just Bitcoin. And this is why they're trying to furiously push out a central bank digital currency. But Elijah, no one's going to pay any interest on the digital dollar. So they're just literally hemmed in. Technology is leapfrogged the Federal Reserve. They are a day late and a dollar short as usual. China is way ahead of the curve on this. They already have their own digital currency. The Fed is still fiddling, trying to figure out what to do. It should be leading this innovation, and instead it's way behind, trying to attack it, shooting arrows in its back. It's so classic.
No, you mentioned also, I mean, one of the things that we've talked about in coming full circle here is inflation and the devaluation of the dollar. We've seen really the highest inflation we've seen in, over a decade just in the last couple months. So your perspective on that, and do you see that this new Fed decision will really will bring inflation back down? Will inflation just be transitory?
Who knows? The Fed may be able to pull the rabbit out of the hat. We saw something similar back in the 2008 crash. We peaked out with commodity prices around 2011. The stock market kept charging higher because of all the liquidity, and commodity prices were able to come back down to earth. This has been a much larger experiment with the monetary system, and it's difficult to say. But what I would say is that it's unlikely that the Fed will be able to rein this in as quick as they say they can, although they did admit at the latest meeting yesterday that inflationary pressures were larger than they had anticipated. So the way I the way I am approaching this is that I just simply diversify. So we have, 10 to 15% of our overall assets exposed to commodities, which has been doing fine for the last many months. And this recent blip, I don't think is going to, we may have hit a peak. Who can say that we haven't? No one has a crystal ball when it comes to commodity prices. But I anticipate that we haven't seen the peak yet. Inflation is still going to be here. It didn't go away suddenly because the Fed spoke. It's still here. And we're going to continue to get numbers. The Fed is simply preempting it. It's trying to get ahead of it so that people won't be alarmed when they see higher inflation prices. But how investors will respond, we don't know. Why haven't more people piled into gold with all of the known inflation that's going on? We just had the worst inflation since 1992, and on the producer price level, the worst ever. Where is the gold investor? Why isn't he stepping in and buying gold right here? What's going on, right? It's a little confusing, and the stock market is confusing, right? The Fed has so distorted the market, Elijah, that the investors are confused. I've never seen the market so confused. It's so confused, and we have the S&P 500 and the Nasdaq 100 just recently hitting new all-time highs. We would expect that, when you're pumping this much money into the system, the prices of everything are supposed to go up. And we've seen that in commodities. But again, gold and silver, when we look at the actual technical levels, gold has to really take out the $2,000 level that it hit back in August, I want to say, to really keep this momentum going. Silver, which hit, I believe it was the same time, hit that around $30. Somebody might get real technical on it, but it was around 30. So we see silver bouncing back and forth between 30 and 23, 23 being on the low end, 2150 being the major multi-year support. You break below 2150, you've got a big problem. But 23 is really the technical boundary, and 30 being the top boundary. If we can get a burst above 30 on silver, then we would expect this momentum to continue. Platinum is also very well poised, and the pullback in platinum is fairly attractive to me. We continue to find that platinum is actually much more scarce than what we even believed it to be. So platinum is a very compelling, I think, right here. Longer term, not for a quick trade. But it's difficult to know what's going to happen with the inflation going forward, but we know it's here. It's going to get worse. The Fed has already admitted. But how investors will how they will respond to that is anybody's guess. They're confused.
All right. Well, Jerry Robinson, it'll be definitely very interesting to continue this conversation as we see this, definitely confused market figure things out if it does. But Jerry, once again, thank you so much for your time today. If our viewers would like to hear more of these interviews with you and all the other guests we have on, they can go to libertyandfinance.com. In the left-hand corner, sign up for our free newsletter. If people would like to find you, where can they go? And any last thoughts you'd like to add?
Followthemoney.com. That's where we are. If you want to know about trends, you want to be on the right side of the trend, you want to know whenever a new uptrend happens, we cover 40 plus global markets. We cover most commodities. We cover a tremendous number of ETFs. And our members are just alerted every weekend with new uptrend alerts, new downtrend alerts. That really helps them stay on the right side of the trend. We also have a free podcast. We've got lots of stuff on our website, our YouTube channel. Loads and loads of free stuff as well. Followthemoney.com would be the best place to go. And I would just tell folks out there, just be nimble here. Be diversified. Be careful about going all in. Be careful on social media. There's a lot of people out there who are just, who may or may not be good actors. And I have heard from my own members that many people are happy to find a place like Follow the Money because social media is so toxic and so manipulated in so many ways. Trying to get your trading signals from social media can be a headache. So I would just say, use caution, be nimble, be diversified. The only person who shouldn't be diversified, Elijah, is somebody who is right 100% of the time. Sir John Templeton said that.
All right, Jerry Robinson, once again, thank you so much for your time and insights, and God bless.
Yeah, God bless you, my friend.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.